what kind of accounts can I regularly put money into for retirement?
Oh, okay. Well, there's probably some pieces of that that would be interesting to know in terms of just when you say for retirement, most people think about, I guess, what I call traditional retirement accounts, like a 401k, a 403b, an IRA, a Roth IRA, you know. But when I think about where I can put money or what types of accounts I could use, um, for retirement, I think about the three buckets, the taxable account, the tax deferred accounts, and then the tax free accounts. And so it's an interesting question. I would want to fill and, kind of make sure I have money in all three of those buckets, if at all possible. I think that's very powerful. But in that tax deferred bucket is where you really have the most options. I mean, I know you were working on a case recently with a small business owner trying to, spell out all the different options, that are available to a small business owner in that pure retirement tax deferred type of account. I mean, what did you find? What were some of the options that were available there?
So you have probably like four, I would say. You have your solo 401k, a SEP IRA, which is a simplified employee pension IRA. You have a simple IRA too, and then you have the straight regular 401k, which is kind of
Mhm.
like the four options for a small business.
Yeah.
Solos are set up essentially for when you're a self-employed person with
Yeah.
and you have no employees.
Yeah.
SEP IRA is when you want to have a, a plan, but you want to be the person contribute. The business wants to contribute rather than the employees.
Yep.
Simple IRA is where the employees can defer, but the business will have to do a small match or kind of like an automatic contribution, but the limits are below what a 401k has. And then
Got
a
it.
401k has the most flexibility, but it can be the more complex and more costly plan. So it
Yeah.
really depends on your business. So
Yeah.
those are the options just in your kind of deferred space for a small business.
Yeah. So, I mean, one of the questions that I would ask whoever asked that question is, what's your situation? Are you employed at a company? What are the options within that company? Do they have a Roth 401k? Do they have a regular 401k? Are they doing a simple IRA? Do they have nothing? If they have nothing, then you can still do an IRA, for example. And depending on your income limits, you might be able to do a Roth 401, Roth IRA contribution. So, there's all these different parameters. If you're at a nonprofit, they often use what's called a 403b. If you're at a municipality, they use mostly what's called a 457, although there are a whole bunch of different pieces inside the municipality world too. It's kind of interesting. So yeah, there's actually a fair number of different places that are available for most people. There's something you can put into that tax deferred bucket, and for less, but for a lot of people, there's still places to put into that tax-free bucket, which I think is important. But don't ignore the taxable bucket, regardless if you're getting ready for retirement. Having some liquid assets outside of these retirement plans has some advantages and disadvantages too. But that's true with all of them. When you get all three together, I think the overall advantages are at the highest level. So.